Yo, what is going on everyone? It is your favorite trader, the Master of Coin, and guys, today we are back with another important and super key video. And today we're going to be speaking about market geometry.
Oh my god! Wow! Oh my god!
Now, you may be wondering, what the hell is market geometry? Guys, market geometry is simply being able to understand the intention of every single move in the market. You know, I used to believe that trading was random, right? I used to think the market was random and there was no way, no way we could predict or even know what was going on. You see, what you got to realize, guys, about these financial markets, firstly, it's expensive. Now, what do I mean by that? It's expensive to actually move the price. It costs over $1 billion to move Euro USD by 1 pip. So these markets are moving hundreds of pips on a day-to-day basis, thousands of pips on a week-to-week basis, so that we understand there's a lot of money, a lot of liquidity going through these markets. So when you're trading the market, firstly, you need to understand that every move is very intentional. What it's going to allow you to do is simply understand where you are in the move. Because understanding where you are is a lot more important than what you're actually seeing. You see, I used to trade schematics, I used to trade all these different things, and I used to wonder, why is it going in my direction, and then why is it getting me stopped out? Or why am I entering a trade and getting stopped out straight away? You know, what's happening? It's simply because, again, every move is intentional. So what you need to understand is the true moves and the true nature of the market. And this is going to allow you to do a few things. Firstly, have accurate targets for your trades. And secondly, it's going to make sure that you can even hedge your way into the market. You see, what do I mean by hedging? You see, guys, hedging allows you to take the risk off a trade before you even take a trade. Yes, I just said it. Take the risk off a trade before you even take a trade. Now, let's just get right into the concept because we've got a lot to cover. So we understand, right, basic market geometry, right? We've got the different type of trending markets. We've got an uptrend where price is creating a low, a high, a higher high, a higher low, and a higher high, right? Very simple, uptrend. And again, we obviously in an uptrend, traditionally you're taught to be buying the higher lows. Now, of course, that is the most probable move because you want to be catching, the bulk of the move, right? Of course, there's a lot more money in these sort of swings compared to catching these swings. But what if you can actually work your way into a short, a high probable short from here before you even take the buy? So that when price comes down to your buy zone, you're already in profit. So now you're in profit. And if, let's say, for example, it doesn't even react off your zone and goes straight through it, well, you're still going to be able to capitalize from the market. What if, for example, you're on a weekly time frame and you're seeing an uptrend, but on the daily time frames, 4-hour time frames, you're seeing downtrends, uptrends, you're confused. Again, market geometry is going to clear all of this up for you. In a nutshell, what market geometry speaks about is the fractal nature of the markets. Now, if you don't know what the fractal nature of the market is, let me show you in nature. Now, I know this is not directly relevant to trading, but it is, right? Everything is very relevant. You see, if we go into the nature, for example, right, and we just look at fractals in nature, fractals basically are the same pattern repeating over and over again. For example, right, if we look at, let's say, even all these different cells, all these different plants, all these different things in the world, right? Even if we just look at fractals in nature, right? We're going to be able to see these same patterns repeating itself over and over again. For example, Fibonacci, right? Fibonacci is every single where in the universe to 618, the golden ratio. But again, this video is not on Fibonacci. Now, the perfect way to relate the fractal nature and the market geometry to this is simply imagine this. This shell is the same pattern repeating itself over and over again, right? It's the exact same pattern on the outside as it is on the inside. And that's what the market is. So for example, when you're in an uptrend, right? Let's say you're on the daily time frame and you're seeing one swing like this. When you zoom in now to the 4-hour or the hourly time frame, you're going to be seeing the swings within the swings. Now, why is that important? Let's say, for example, right, you're seeing your daily time frames up. Now you're seeing your hourly time frames just broken structure. Now you're getting confused because your higher time frames are bullish. Now your lower time frames are bearish. Well, it's simply understanding what's the intention of this. Well, if the daily time frame is going to retrace, family, what does that mean that hourly has to do? Think about it. If our daily time frame, we're in an uptrend, and our daily time frame needs to come down to retrace higher, well, what needs to happen for those hourly time frames? Those hourly time frames are also going to need to break structure. when you're seeing one time frame break structure, it's normally to retrace another time frame. So this is why we got to understand the intentions. Now, where's it going to retrace to? Well, again, that's a topic for a whole nother video about targets. But normally it's just to retrace the higher time frames to mitigate, to pull back into institutional candles, to pull back into schematics, to fill imbalances, you know, that sort of stuff. So when you're seeing, for example, these sort of breaks of structures on your lower time frames, it's simply going to be to retrace another time frame. So what this could allow you to do, if you're playing off a higher time frame point of interest and this comes into supply, again, this can allow you to even short your way into the market and now reduce your risk. Because now, let's say price comes down to your original point of interest and you're already in a trade. Well, now this trade is going to be break even because it's in profit. Secondly, you're going to be in a lot of profit. So now when you take the risk for this initial buy position, if it goes against you and just keeps melting, well, guess what? Cool, you maybe had one loss from the buy, but that sell is going to automatically cover the risk. Additionally, this is going to allow you to get more high probable trades as well, because at each of these reversal points in the market has to break structure on some sort of time frame. You see, even on these lower time frames, you're going to see these time frames break. So now, for example, if you're seeing your lower time frame break structure and your lower time frame is bullish, right? You see this last lower high that led to a new lower low, break structure, and you're seeing your lower time frames bullish and it's now in alignment with your higher time frames. Well, now you've got a high probable scenario to even trade a continuation. But that's another thing. You need to understand, what are you trading? What is the intention of the move? Because again, if you're taking a short position here, right, and you're counter trend trading, it doesn't make sense to obviously be having super lower targets. This is where in some situations you may be short in the market, it goes in profit, and you're wondering, well, why has it come up and reversed and hit my stop loss? Again, you need to understand the true intention of the moves. Are you trading a retracement? Are you trading with the trend? Of course, trading with the trend is a lot more probable, but when you can understand true market geometry and true market mechanics, you can get in these trades. And this allows you to reduce your risk before you even take a trade, family. Because again, if this black line is the weekly time frame or a daily time frame, this may take months to manifest. This may take months to come down. That doesn't mean, again, if you're an intraday trader now and you're waiting for, or even just a swing trader and you're waiting for a higher time frame point of interest on a daily or weekly, that could take months or weeks to play out. But understanding, if you're trading your way down to, for example, a weekly point of interest, why not capitalize an intraday short? Why not keep stacking intraday shorts, intraday shorts, intraday shorts from the M15 and below? Why not? So when it comes to market geometry, family, you've got to understand all the market is trying to do is two things: seek and destroy and rebalance itself. Once it's destroyed prior liquidity, right? If we kind of move it up here, once we've destroyed prior areas of liquidity, for example, this prior high, once price has taken this liquidity, all it's going to try to do is to come back and rebalance itself. But again, if it's going to do that, what has to happen? These lower time frames have to distribute, have to break structure to give these higher time frames permission to actually retrace and go back down. So when I say market geometry, family, all I mean is knowing whereabouts you are in a trend. And when you know whereabouts you are in a trend, you can be anticipating certain things like schematics, right? If you're, for example, if you just created a new high, it makes more sense now to be potentially looking for distributions rather than accumulations. Why? Because you're at a premium level of price. Right? If you're at a discount level of price and you've just rebalanced itself, now it makes more sense to look for accumulations rather than distributions this low in the range. Let's say, for example, you're in the middle of the range. It makes sense now to look for continuation plays because we've just had demand come into the market. We're in a higher time frame uptrend. It makes sense to look for those continuation plays. So let's actually jump into the charts and look at some real examples of this sort of market geometry and understanding the intentions of the breaks of structure. Okay, cool. So I'm going to show you an example in AUDCHF. Now, of course, right, we practice what we preach. I'm going to show you a trade I actually taken. Here's the the trading view screenshot. I'll put it on screen now. Here's the MetaTrader 4 execution as well, which you should be able to see on screen now. Now, let me break this down for a few examples in the past, and obviously we'll get into the future. So let's say back here, for example, right, even if we just go to our hourly time frame, why is certain levels being broken? What are they doing? And again, this is the key. For example here, right, we can see we've got, right, a downtrend, right? Lower low, lower high, lower low, lower high, lower low. When we see this break of structure, think about it. This break of structure is giving permission for this leg to go and retrace, right? On the higher time frame, yes, that's one impulse. But on the lower time frames, you've got your trend within the trend. That's why I showed you the fractal nature. And obviously we can see, again, it did break structure. So now, once you see something like this, see a low, a break of structure, you're trading at premium pricing. Now the buys are less probable, especially now when you see this lower time frame structure get broken. So understand what leg are you in on your higher time frames, and then what legs are you in on your lower time frames. For example, right, this is now a higher time frame leg from this low down here to this high. And within our within our higher time frame leg, we've got our lower time frame structure, right? Trending to the upside. So when our lower time frame structure is being violated, being broken in our higher time frame leg, again, that's given permission for your higher time frames to retrace. For example, this is our last low that led to our new high. Once this gets broken to the downside, this is now given permission for this higher time frame to pull back into an area of interest to retrace higher. So again, you can use these to catch intraday shorts, because again, right, if you're just waiting for these higher time frame swings, sometimes it may take you a good few days, you know, maybe even a month, right? In this example, this is over 21 days. If you were just trading AUD-CHF, for example, you would have been 21 days without a trade, which of course, you haven't always got to be in a trade, but if you're more of an intraday trader, understanding market geometry is super, super powerful. So for example, now, once this low here that led to the new high gets broken, what happens? This is given permission now for this higher time frame to retrace. And then once you see these lower time frames start to get broken, well, now you know you're in alignment with the higher time frame, and you can now be taking much more higher probable trades to the upside and be capitalizing on the rest of the movements. So again, that was just one example. I'll show you another one. And again, guys, understand trading is simply just repetition, right? You need to train your eyes to be seeing these things we're talking about. Don't expect this to happen overnight. Like, it's not even about watching these YouTube videos. It's about what you do with the information on this YouTube video. I guarantee 99% of you guys that are watching this are probably not even going to go and backtest this concept. And that's why 99% of traders fail. Simply put, because they're not willing to do what other people won't. If you want to live a life that most people won't, you got to do what most people don't. You know, you can't be sitting on YouTube all day watching these videos for entertainment. You need to watch these videos and go apply it, right? You need to get your hands dirty, right? How do you learn to drive a car? You got to get in the car and drive it. You can't sit and read books all day. Of course, there's an element of theory, but you have to practice. You have to train your eyes. And ultimately, guys, don't cheat yourself. You know, don't say, oh, I should be getting these results right now. Well, if you've put in the work, if you put in the effort, the results will show. It's always how it works, right? You can't cheat the universe. You can cheat yourself, but mate, you cannot cheat the universe. So again, a higher time frame leg, right? This is our low. This is our high. Now look on our lower time frame inside of it, we can see the trending structure within inside it, the geometry of the market. So once these lower time frames are being broken, we can now expect pullbacks to certain areas. For example, once this low gets violated, here, well, we now can expect lower pricing in the market. So let me bring you into the thought process of the trade we actually took on AUD-CHF. Now, this trade in AUD-CHF produced a 1 to 39.9 risk to reward. Absolutely fantastic. Again, screenshots are here on screen now, if I remember to put them here. So
have you ever had a dream that you had?
Say it with your chest, little ass nigga.
So let me walk you through my thought process. So on this trade, right, of course, we're on the higher time frames, right, they're bullish, of course, right? Higher time frames are bullish. Now our lower time frame coming down ultimately broke structure. Now again, each time frame has its own unique and independent structure. So when I actually now went down to the 15-minute time frame, right, I understood this was my hourly leg, right, from this low to this high. So now we understand what I just showed you. If this hourly time frame is going to retrace to where, I'll show you my point of interest I was looking at. Right, it was this 8-hour institutional candle here, right? This 8-hour, and I wanted to be buying from this level. Now, obviously, this is going to take a while for price to come down. So when I was actually analyzing this market, I saw the lower time frame structure, right? We had, right, high, higher low, higher high, higher low, higher high, higher low, higher high, high. I had the bullish structure. Now, what happens? We had this last low that led to this high. So what I said when I was analyzing this chart was, okay, if we break this level here, right, this last low that leads to a new high, we can be anticipating lower pricing to at least 67.450. Now, of course, that was an area where we did take partial profits. And again, I'll show you guys the trade management, because trade management is super, super important. When you guys get better at trade management, it's going to allow you to not only catch higher risk to rewards, it's also going to allow you to make more money in the market. which ultimately we want. Once we broke this structure here, right? This low led to this high. This, and again, it's not just that it broke structure, it's that it played off a higher time frame point of interest, a higher time frame level of supply, which we'll go into on another video. But more importantly now, we play off this supply, and now we're seeing proof of supply play out. So what happens now is this is given permission, this lower time frame breaker structure on the M15 has given permission for this hourly to retrace. So now we can look at the order flow on the M15, and we can see we're getting what? Lower low, lower high, lower low. Very simple now. We just pull back into our institutional candle. We get our lower time frame distribution. We take our entry. Let it play out. Wait for our equal highs to get manipulated. Price break structure. Again, same thing, right? This is our leg. Or this is our leg rather. Lower time frame going up. Bullish. Break structure. Goes lower. Very simple. And then we can see from here. There was the entry. Again, you can see on the screenshots now. And from there, price just rolled over and absolutely died. And then guys, now what happened? Again, our original point of interest was this low down here. So once price traded into this low, again, price was trading at around a 1 to 20 risk reward. So what I was doing now is I was looking to work my way into potential buy positions. Because again, I had this POI, my hard time frames are bullish, so I was looking, okay, let me start looking in for buys. And again, this is the power of having these hedges in the market. Because now, once I saw price trade into this, and again, we trade into it during Asia, so it's pretty weak price action, obviously we had a new bullish point of interest here, right? But notice what happened when price came down to our point of interest. We had no signs of demand. Price just melted straight through it, so there was no reason to enter a buy position. And even if you did enter the buy position, let's just say hypothetically you did. Let's just say you did take 1% risk here. The 1 to 20 at this area covers that risk completely. So even if you did take the buy position here, well, it doesn't matter. You were in the buy position, let's just say. Again, I didn't take it. But let's just say you did for whatever reason. Didn't meet any of my trading plans, so I wouldn't have taken it. But let's just say you did for whatever reason. This sell completely covers all of it. And how you do this now, how you manage this trade is you close partial profits, right? You close partial profits on this order up here. And now you just let the two levels battle out. Either way is what's going to happen. This trade's at break even. This trade you paid yourself, right? If you risk, for example, $1,000, you're up 20 grand. Close, pay yourself half of it. Now you got money, cool. Whatever happens next is anyway money. If it comes lower, guess what? You've made more money. Cool, you took 1% loss, but the profits from this is going to cover all of that. And even if now this plays out and goes higher, well, this is break even. You've paid yourself anyway, and you still make money. So, guys, I really hope this helps you understand the power of market geometry, because this concept for me was an absolute game changer once I started to understand it, but not just understand it, actually start applying it. And again, from there, what happened? Price continued melting lower. So what did we do? We kept the trade open. We kept the trade open, and we can see it came down and eventually started to sweep this low, giving over a 1 to 39 risk reward. And again, there is potential for price to still even go much lower, of course, right? We're not, the whole purpose of this video is not to forecast what's going to happen next. Again, it could just reverse now, but the whole purpose of this video, guys, is understanding the power of market geometry. Why are we breaking structure? Where are we going? What are we doing? And again, this will help you have good targets in your trades. Because again, one valid way of trading this now, you could have just took all of your volume off the table here, right? Again, that's completely valid. It's entirely up to you how you want to build your trading plan. You have to gather your data, or you have to follow someone's trading system exactly how it's taught. If you can follow someone's trading system exactly how it's taught, of course, it's going to save you a lot of time. But if you're going to develop your own, you need to gather data. You need to make sure you're journaling your trades and constantly be creating and evolving. So guys, if you guys want to know more about my trading plan, you guys want to know more about our trading strategies, send me a DM on Instagram. Again, I'm not going to message you first. All of my social media links and contact details will be in the description below, family. There's a lot of fake accounts out there, so please don't get scammed. I don't do signals. I don't trade your money for you. No, we provide education. That is all we do, family. So if you guys want to know more about mentorship, you guys want to know more about how you can really take your trading to the next level so that you can get funded, shoot me a DM below. We're going to hop on a call. We're going to see what's possible, and we're going to blow this up, man. Don't forget to comment, like, and subscribe. Leave any comments for any videos you want to see, and I'll see you guys all at the top, from the top, because the bottom is way too crowded, man. Let's get it. Sheesh.